It took me over 5 years to make a single dollar from trading Forex, and in the meantime, I spent over $10,000 on Forex courses and blew countless accounts of my own money, and it was just absolutely brutal. But the question is, why? Is trading actually that difficult? And why do 90% of traders fail forever? I have spent both a lot of time and money thinking and asking this exact question, and the answers that I've come up with are not something that I've seen really anybody else talk about. So if you want to become a successful trader and do it way faster than I did and not spend the insane $10,000 that I also did, these are the 3 things that completely transformed my trading. First off, we all know that trading is difficult. It can be absolutely brutal, but most of this all comes down to our emotions. Our emotions are what make it difficult. You see, the thing that I've come to realize with trading that, again, I haven't really seen many people talk about, is that trading doesn't have the same correlation that we see with pretty much everything else in life. Let me explain. The harder you work on things in life, you're pretty much bound to always get better. For example, if you are a golfer and you spend 2 hours on the driving range working on your swing every day, you're pretty much guaranteed to get better. If you spend 2 hours a day studying Italian, trying to learn Italian, well, your Italian is going to get better, pretty much guaranteed. It would be incredibly difficult to try and not improve. But trading doesn't offer this same correlation. The amount of time that you spend trading, the amount of time you spend on the charts, backtesting, whatever it is, it does not correlate necessarily with you making more money. Now, this is what makes trading emotionally so difficult, because it offers a correlation that is completely against pretty much everything that we have seen in our own lives. If we work so hard at it and we don't make more money, we simply can't process it. It's not a normal thing for us to work harder and not see better results. And that is where the emotions, the frustration, the anger, you name it, that is where it comes into play. It all has to do with this correlation. But fear not, understanding this correlation is actually what led to the first step of me improving my trading psychology, of understanding that there's not really any correlation between how much time I spend on the charts and how much money I need to make. And this quickly led to me realizing that, well, everybody flexing on social media, showing their 6 hours of backtesting, checking the charts up at 4 a.m., it has literally nothing to do with their results. It's all, in my opinion, essentially a scam. When it comes to this correlation, I always knew it intellectually, but I never knew it intuitively. So if we understand that, just because I spend more time on the charts doesn't mean I'm going to become a better trader, why is it that losses drive us so mad? And this brings up a really important discussion about losses in trading, something that nobody else actually talks about. You'll see people take losses on social media and they'll say, oh, I took this loss, this went wrong, that went wrong, I should have done this differently, I should have done that differently. But if we understand as traders that losses, no matter what kind of strategy, no matter how good you are part of the game, nobody is really saying, hey, I took a loss, but I'm not going to do anything different. I did literally nothing wrong. You don't actually have to learn from every single loss. Now, that's a controversial thing to say nowadays, but if you have a 60% win rate, you don't have to learn from 40% of your trades. Sure, you'll learn from some of them, but most of the time after a loss, you shouldn't actually do anything differently, assuming you're following your trading plan. So if you have been waiting for somebody to tell you that losses are part of the game, that you don't actually need to learn from your losses, this is your message. You see, for years, I struggled as a trader because, sure, I knew that losses were part of the game, but it led to me just strategy hopping, of always trying a new strategy, the new flashiest thing, the new most complicated thing, you know what I'm talking about. But it never actually led to any better results. And that's what led to the wheel spinning of just not making any money for years upon years. So the question is, though, once you understand this correlation, once you really intuitively understand that loss is a part of a game, where does that lead us? What does that mean that we should do in order to actually improve? Because sure, just because we spend more time and we don't necessarily improve, what is it that we can do to improve? And there's one thing that I did that completely shifted my focus, that completely shifted the results in my trading, and that was understanding and finally utilizing, after years of losing money, the law of large numbers. So you see, most traders focus on the next trade or the next couple of trades, the trades this week, the setups this week, and they hope that they are winning setups. But if they're losses, they get emotional and then, they spiral out of control. This was me, again, for years. But once I finally started thinking in terms of the law of large numbers, of understanding that I have an edge, but my edge will only play out with a large enough sample size. It completely changed everything. I no longer cared about the next trade or the next 2 trades. It was incredibly liberating because I could take a trade, I could walk away, and I knew it didn't matter what the result was because I began focusing on the next 100 trades. Alex Hormozi, I'm a big fan of him. I'm sure many of you are as well. He has this great line where he says, start thinking and counting in hundreds. It completely changes it. If you're trying to create content, think in terms of hundreds of videos that you have posted. As a trader, think in terms of hundreds of trades that you have taken. Rather than focusing on one trade or the next 2 trades, focus on the next 100 trades. It completely shifted my perspective, my approach, and it forced me to actually begin utilizing my edge and understanding that losses essentially really don't matter as long as you are risk managed. Okay, now we need to talk about social media. If you haven't yet realized or learned, social media is toxic, and unfortunately it is full of tons of liars. The stat is 90% of traders fail. At Lark Funding, roughly 15% of traders that sign up for an evaluation will go on to get funded. It's a little bit higher than I believe the industry standard, which is great, but it still means that 85% of traders aren't succeeding. So if that is the actual statistic, why does it seem like on Twitter, Instagram, you name it, that basically every influencer is massively profitable? Are they the 10%? Well, I don't think so. I think, in my personal opinion, if 90% of traders aren't consistently making money from the market, wouldn't that also potentially mean that 90% of influencers also aren't profitable? It's a controversial thing to say. I'm not here to talk about the influencers. I'm here to talk about social media as a whole and the impact that it has on traders. When I was first getting into my trading journey, I was following a ton of traders, and all of them seemed massively successful. They were showing screenshots of their MetaTrader accounts. They were showing pictures of their homes, their cars, their watches. And all of this made me feel like a complete failure, like I was doing something wrong. Inevitably, I ended up signing up for their course, learning essentially nothing that I couldn't have learned on Baby Pips. And when I didn't find consistency, I went to the next influencer and the next, and this is how I spent $10,000 on Forex courses. Social media is, I think, as a whole, a net negative for traders. There are, of course, legit traders out there that are sharing their journey and how much money they're making, and that can be incredibly motivating. But I think it's a net negative because it's very difficult to know who to trust. And that brings up a very important discussion on the grass being greener. And let me tell you, the grass is not greener on the other side. The side where the grass is greener is the side that you water, where you water the grass. That is what's going to make a difference. This point here is deeply connected with the first point of discussion that we have brought up, of the law of large numbers. You see, my opinion is that literally any strategy can work. If you want to do support resistance, if you want to do trend lines, if you want to only do 51 Fibonacci retracement levels, all of those will be profitable. But they'll only be profitable if you allow the law of large numbers to play out, if you have a large enough sample size. But social media leads to traders thinking that they're doing something wrong, when really the only thing they're missing in their strategy is time. The only thing they're missing in their strategy is a large enough sample size, is enough trades to allow their edge to play out. And I think by following so many influencers and traders online, we don't see the success that they're seeing, the success that could possibly be completely fabricated. It might not actually even be from trading. It's very difficult to have the discipline to stick with your strategy and say, you know what, I'm not yet where I want to be, but I'm going to keep going with what I'm doing because I understand that the only thing that is missing with my strategy is time. If I had stuck with the very first strategy that I had learned as a trader when I was 17 years old, which was pattern trading, I think I would have way more money in my bank account than I do now. All that was missing was time and patience with that strategy. But I felt, no, there's something better out there. Let me spend another 6 months, another 12 months learning a new strategy and then implementing it. And then when I didn't find the consistency, when I couldn't handle emotionally the losses that naturally occur with any strategy, I went on to the next. And this repeated for years. And I spent, again, tons and tons of money that didn't need to be spent. But it's all because I had bought into this lie on social media that I was doing something wrong, that there were so many traders out there that were doing better than me. But even to this day, is there money coming from trading? It's hard to know. So all that to say, the good news is once I realized this, once I fully, burnt all of the bridges and, did everything, burnt all the bad karma off that I needed to, and I finally stuck with the strategy that I had confidence in, then everything changed. I didn't do anything fancy, but I ended up getting funded with $400,000 off a very, very simple, straightforward strategy that my 8-year-old nephew could do. My 8-year-old cousin could easily do. And all that to say, if you are struggling, I think these 2 points, the law of large numbers, and really assessing the impact, the overall net impact that social media is having on you, specifically in the trading realm, I think this could make a massive difference in your trading, because these two elements alone, as simple as they are, made a huge difference in my trading. That doesn't mean you can't follow influencers, you can't get motivation. That's why you should watch this video here so you can learn how this trader received $20,000 in payouts in just 3 weeks alone. If you made it this far, we appreciate it. We'll see you in the next one. Until then, peace.